Well, good morning to you all. It's fantastic to be here. I hope you had a good night and a party night last night, but not too much party, and to not listen in to this brilliant conversation that we are having. I also have to say I'm not a neutral observer of Robert or Vista, because I sit on the advisory board of Vista and really enjoy having the conversation about software that we're going to share with you guys today. And Robert, obviously you've been the founder of Vista, and I don't want to age you this morning, but you have been engaged in investing in enterprise software since the 90s, basically.
Right.
And very successful at that as well. So can you tell us a little bit about how you see this space right now? Is it still an interesting space? And why have you chosen to be so exclusive, only enterprise software, only B2B, and not go into directions of travel that you could have over these years?
Sure. I think, and Helly, so good to see you, and thank you all for being here and being a part of this wonderful Super Returns in Berlin in June, which is great. So let's keep that in mind. A couple of things remain true about enterprise software, and I think the most important is it's still the most productive tool introduced in our business economy in the last 50 years, and likely will be for the next 50. And it's interesting because, here when talk about this generative AI, and well, it's software, okay? And the element that it will bring, and we'll talk a bit about this later, I hope, is again an additional catalytic activity for productivity, and that will then permeate, in essence, almost every industry on the planet. In the early days of enterprise software, what we discovered and we found, I was a former chemical engineer, that when you implemented these solutions in a plant, it created a massive amount of productivity and elimination of waste. And then we took it from the plant as computing power got cheaper. We moved it into the office, and then all of our business lives got more efficient in the way we did everything from buy an airline ticket to manage a transaction in insurance, for instance. And so that hasn't changed. And in fact, what has changed is we've now distributed computing power globally. We've connected that computing power. And so enterprise software has now become the infrastructure of business and the infrastructure of commerce and trade. And that hasn't changed. And it's actually, there's now an accelerating effect that's occurring for productivity driven by enterprise software. The unique distinction, again, between what I call the consumer businesses, consumer software, and you all have seen this over the last really 5 quarters or so, is when you have inflationary pressure and people are actually making decisions between, do I upgrade my streaming account, or do I buy groceries or buy fuel for my car, you see a massive decline in the revenues and bookings for those consumer businesses. Whereas if you look at the enterprise software businesses, they have still been in the kind of high teens, high to mid-teens. There's been a slight decline, and in fact, Microsoft has now picked back up again. And our portfolio overall has been tracking at that kind of 15, 16, 17% growth over a $26 billion revenue type platform. The main reason is the productivity. We measure the productivity of our software for our customers. So our average company delivers a 640% ROI for the products that they deliver to their customer base, which is about 3.5 times almost anything else you can do in the use of capital. So focusing on this space, there's still tremendous amount of what I'll call tailwinds for us. It's still the fastest growing space, still massive amount of productivity for its customers, which creates a natural consumptive dynamic that even in these turbulent times can be taken advantage of if you're disciplined in your buying and your value creation approach.
Yeah, so the key is the discipline that you're talking about, just to stay in that lane and continue that lane. You talk about enterprise software as infrastructure.
Right.
I always find that interesting because it's about infrastructure that we saw 50 years ago that was so important to get our whole society to operate. Can you talk a little bit more about that, and also how you see that actually impacting societal responsibility?
Sure. It became very evident during the pandemic.
Yeah.
It is the way in which we communicated. It's the way that we kept businesses moving forward. Commerce, trade, not only locally but globally. And those who didn't have and hadn't invested in their infrastructure became blind in their supply chains, became blind to their customers, couldn't contact and have engagements with their own employees. And so, of course, it was a massive consumption to say, oh, I've got to rebuild or build an infrastructure that is reliable so that I can conduct my business. And we saw that. And of course, there was a massive asset inflation in our market, 2 and 3x, and it was a ton of capital. We'll talk about that. That got plowed in it. But now it is renormalized in terms of the valuations in the marketplace. So the societal impacts are we have found that we can be very efficient in our workflows by not necessarily gathering every time. It's a lot more fun to gather. But we found that we can actually be, in some cases, as efficient or more efficient by actually having connectivity points which are driven by enterprise software infrastructure. That's a dynamic that we all have to think about. There's great productivity to it. One of the downsides is we probably spent a little less time, of course, having the personal conversations and engagements with even family members, et cetera. But I think we're getting to the new equilibrium state. We're getting back into the office is important for teaching and training and developing, but also having the extensibility of access is as important to ensure that we have the productivity in business. So that new equilibrium state, I think we're finding at this point, and I think enterprise software is very much a part of that.
And you're also basically saying that because it is infrastructure, we will always need investment in this area, and there will always be, profit to be found in this area.
No question. And I think a big part of that is also, there are the catalytic activities around that. I call it those infrastructure and those modality, right? And the modalities are what is actually occurring, in the, data, for instance, is one of the biggest modalities we have to think about in terms of, generative AI. Do you have dominion and sovereignty over your data? Right?
Yeah, that's the next thing I want to ask you, because that's the future. What are you advising your 80+ portfolio companies to do in this space?
Right.
AI is what everyone is talking about here. What are you advising them to do right now?
Sure. So it's interesting. We've been implementing, artificial intelligence solutions across our platform for over 15 years in multiple instances, from our sports business to transaction processing.
So it's important to say it's not new for you.
No,
You've done it for so many years.
Right. But what we've done as we started now engaging in generative AI, GAI type of solution sets, was saying, okay, there's a couple things that are important. First is, does it pose an existential risk to the 86 portfolio companies? So that's kind of question number one. And if it does, what is the extent of that risk, and over what period of time might that manifest? So that's kind of the first piece. The second piece is, how do you use it as an enablement tool to create products, services, solutions that you currently don't have, for your companies to now deliver to their customers? And then how can you use it in your companies to ensure that they become more productive in the work that they do? And of course, as a private equity firm, there's a whole nother overlay of how we can use it as a private equity firm to be more effective in what we do. So rather than what I talk about, finding an episodic solution company by company, we, of course, as you know, have a generative AI council, eight or so of our CEOs, CEOs from our portfolio companies, as well as our CTO and a few other folks in our value creation unit, that consciously and intentionally focus on those questions. And what are the frameworks? And how are those frameworks going to be applied in the underwriting of new companies that we're looking to invest in? And what are the impacts in terms of the cost delivery of, once we underwrite, what is the cost reduction we can take? What are the new features, functions, services that we can now deliver to the customer set? But it's important to have a framework to do it at mass and scale, as opposed to, well, this one company is going to do it really well, and we hope these others figure it out. And so our organizational design, by its very nature, lends itself. If we were sitting in these seats 10 years ago, which some of us were, we were very young at the time, but 10 years ago, we did the same thing around cybersecurity. Okay, how do you deliver cybersecurity solutions across a portfolio of companies, as opposed to hoping your CEO or CTO or CISO actually figures it out? And so that holding company mentality, we think, is going to provide tremendous benefits across our entire platform.
So you basically have a framework, a protocol, if you wish, for all the portfolio companies you go into. Do you think that they appreciate that they benefit from that? Or
I know they appreciate it, and I know they benefit from it. But it's an important question, because we have companies that are doing $3+ billion in revenue, and companies that are doing $30 million in revenue, right? A $30 million revenue software company is not going to gain that access to that talent, capability, or the vast resources we pull from our partners, Microsoft, AWS, Alphabet. I mean, we get, I'll use these words, disproportionate amounts of resources because of the size of our enterprise, that we can drive across our portfolio companies, that even our smallest companies have access to resources that they wouldn't get until they were maybe 100 times bigger than what they are. That is a way I think our systemic approach enables them to all be effective, and pulling them together intentionally to drive that dynamic. For instance, we have 2 hackathons, I think this month, and it's just internal, 86 portfolio companies, and some are fielding 2 and 3 teams, that is co-sponsored by Microsoft. Okay, when I say sponsor, it's not a check. They are bringing their top AI specialists, generative AI specialists, to work with our teams and product development, infrastructure. How do we utilize their intelligent platforms, intelligent cloud, more effectively across various elements of our infrastructure? Those are important dimensions that we uniquely bring as, call it 4th or 5th largest enterprise software company in the world. Exactly.
Do you think you're state of the art in this space?
I don't know what others are doing. We will continue to lean forward into the catalytic technologies that enable our industry to be effective. Blockchain being another, right? How do you utilize the blockchain, which we talked about, pre-pandemic on this very stage, and how we utilize it. Yeah. And again, how we utilize, artificial intelligence development products. But it is critically important to always understand, I call it the substrate is enterprise software. And there's going to be, additional, call it catalytic technologies that enable it to be more effective, more distributed. And one of the advantages I think it gives us is we can also see it play out in slow motion a little bit in other theaters, where they are just now understanding the importance of enterprise software in those theaters, as opposed to enterprise software just sitting in specific companies or state-owned industries or whatever, or that sort of a thing. There's where the opportunity lies, again, in having an infrastructure organized the way we have it organized today.
What I really love about this is not to see AI as risk, but see it as risk, of course, but also opportunity. And I think that's what you're doing in a very systematic way. We could talk about this for a long time, but we're not.
Okay.
Because I like to move on to the general risk. I mean, the world is changing. Capital may be a bit scarce. We are in a difficult situation in many ways. I think it'd be interesting to hear your take on the risk that you are seeing.
Yeah, and there are quite a few. Obviously, we've got a ground war here still in Europe. That's a big challenge. We have got, and this part of this actually comes out of the fact we've been in a pandemic and isolated. We have geopolitical tensions that are far more escalated than they need to be. Yep. And I think it is incumbent upon business people, in my view, to also provide leadership in bringing those tensions down. We can't afford another kinetic war someplace on this planet. And there is, we've been doing this for now, 30 years, this whole dynamic of geopolitical trade in a globalized economy. And sure, we're going to move to some, near shore and allied shore type of, reconstruction of supply chains. But we have done a really good job of bringing, massive numbers of people out of poverty across this planet. I know that's something you're very concerned and focused on in your work with children. And it is important that we keep that momentum because we all know as the overall global condition improves, the capitalist opportunity should and will improve as well. And I think we have to ensure that we put underpinnings in place, which are relationships and trade and call it assets that are owned across the planet by people across the planet. Yeah. So there's vested interest and stakes in ensuring that there is a progressive motion towards a more stable and I'll call it a gentler planet.
For sure. I mean, it's like geopolitics wasn't something that maybe a CEO founder wanted to get into, but geopolitics has called us and landed on our table, and now we have to deal with it. So in terms of the global economic situation, how are you seeing that? Is investment coming? What is happening? What's the risk there?
Yeah, so, our space in particular, got really interesting. Software kind of gets re-rated every now and then for various reasons. Yeah. The last big re-rating that was sustainable was this whole advent of call it cloud native software in a SaaS business model. We all call it SaaS, but it's a business model on top of a hosted solution. But And software kind of re-rated to about a 6x multiple in that period of time. And then I said the world got filled with capital and ambition, right? The capital, because interest rates, of course, were very low. Every country on the planet decided in the pandemic they were not going to be the ones who plunged into a recession. So they flooded the market with capital. In our space in particular, literally the assets tripled in value from a multiple perspective. On a growth adjusted basis, a little over double. And more capital got plowed into that market in 2020 and 2021 than the prior 4 years combined.
It's crazy, isn't it? Yeah.
It was crazy, right? And I call it very sophisticated investors put a lot of capital to work, and I'm kind of, well, these companies aren't growing as well. Why are you putting that much to work? Well, capital was free and it was available. Well, today it's actually moderated back to, I'll call it the historical norms from 2014 to 2018. And so it's an ideal time to buy these companies because they actually grow faster. They actually have higher productivity dynamics associated with them, and you can get them for a third of the price of what you could get them for 12, 18, 24 months ago. So it's a great time to invest. There's more capital constraints in the debt markets and other things, but there are also what I'll call sophisticated investors who understand this is a good time to buy, and that was a good time to sell. We took 6 companies public during that great asset run-up. And now is a good time to really redeploy and deploy capital in this marketplace. And one of the main reasons is, again, when I look at the enterprise software revenue dynamic, it has dampened, but it's still mid to high teens growth rate. Okay, consumer, of course, has gone negative for a period of time, mid to high teens. So it is a great time to invest. And when you look at the retention rates, I look at our overall portfolio, call it $26 billion in revenue, 103% net retention rate today as we sit here. So there's a massive opportunity to continue to, deploy capital in well-run, I'll call them defensive, enterprise software, high retention rates, high recurring revenue type businesses that are mission critical and business critical. But to the risk part of that, you have to understand how certain existential risk components, and some of them are geopolitical, okay, but some of them are product oriented in some respects, or technology oriented, like generative AI. And you need to have frameworks to underwrite that in a way that you're providing, again, a kind of the right sort of risk adjusted return for your investors.
Yeah, well, it's a very big answer, but it's a very true answer. That is actually you're using the opportunities of the market to just be here. That's why you're so busy these days.
Yeah, for sure.
Traveling the world
for sure.
And going to the world. I've seen that also. The strategy is to move more global.
Yeah.
Talk a little bit about that. I want to talk about something else before we finish.
Sure. I mean, so, I always say there's really, 5 major economies on the planet that actually don't have constructs of enterprise software layer. The enterprise software sits in, companies or, families of company structures, the Keiretsus or the Chaebols and the state-owned enterprises, as opposed to across an industry. And the dirty little secret about enterprise software is when you sell to an industry and you've got critical mass in that industry, you have the ability to work with the leaders and understand their workflows. That gives you the ability to derive and create new products that you can sell to other folks in the industry. Now, what it actually does is creates a productivity uplift for that entire industry, as opposed to just 1 or 2 companies in that industry getting that productivity uplift.
That's a secret. That's a secret.
Well, not anymore. We just tell everybody. But I think a big part of it in that construct is identifying those geographies where that exists, creating the right partnerships and relationships, and they're very different because you have to understand, call it the cultural norms of business and engagement in those theaters, and conduct business and transact in ways that you can now, I'll call it pivot those high quality solution sets into enterprise software platforms. And that is massive because about half of the planet is still in that state. And the business opportunity there is phenomenal, and it is clear to me it's not being recognized but by a few. And so we, of course, are trying to move efforts in that direction.
Cool. Another area that I know that I was interested in when I came, because I come not from this part of the world, was that you've been talking about getting access for a broader range of people, more private people into private equity, because it's been really hard space to penetrate.
Right.
And I wouldn't you probably wouldn't use the term, but democratization of actually private equity.
Yeah.
I've learned how much good it can do. We'll come to that in a second.
Right.
But what do you mean? But what are your thoughts about this?
Yeah, that's a great question, and there's layers to it. At the one layer, it is access to the product.
Exactly. Yeah.
Right. I sit there. I've got relatives who are, they went to college, went to medical school, making a decent salary, but they're not a qualified investor.
No.
Okay, because they've got a bunch of student loan debt, and so they actually can't invest in our products, right? Which is just silly.
And they don't get it presented.
Right.
Yeah.
And so they can buy some public products, which typically don't do as well as private equity. And so we have to, and one of the things we're doing is now we're moving into the retail channels with of course, some of the large investment banks, et cetera, but, platforms like ICAP. Yeah. Okay, how do we now democratize so people have access to our product as private equity? We've historically outperformed, the public market indices for decades, and we historically have a lower loss ratio for decades. So we need to provide that at that level. The other level is actually access to the business, right? And as an employee, for instance, part of what we focus on, and I talk about, Edison Alliance, how do we, get 1 billion people online so they can now participate as contributors in our world of software, writing code, being a part of our infrastructure of, we got 120,000 employees worldwide. And so now they can participate as employees in this great industry. And of course, our firms. Our firms have traditionally not been the most diverse. We're one of the few gender parity firms in private equity of size and scale. And how do we ensure that we provide access, opportunity, and so people can participate in this industry and frankly, capture the fruits and the benefits of it, which is improving their condition and frankly, improving the condition of the communities that they care about. And I think those are the elements that we have to be conscious and intentional as private equity managers and stewards of capital to do well at scale.
Exactly. So I think that's why I want to end as well, because we know each other and I know how deeply you care about communities and the company and what it does to be part of changing the world.
Right.
So, and I think to combine that with the amazing results that you have demonstrated over the last 20 years, how do you think about that? And how do you live it in your daily life in the company?
It has to just be a part of the culture.
Yeah.
And you've had a chance to be exposed to our culture. And, part of our culture is a culture of excellence. Okay, how do we ensure that we are excellent in what we do? And how are we comprehensive in our thinking, in the way that we recruit, the way that we train, mentor, develop, and then in our portfolio companies, our portfolio companies have to be an extension of our culture. We created a program called Conscious Inclusion. And enterprise software companies have not been the bastion of diversity, okay? And so we said, well, why is that? Because they typically, they're hiring people out of certain places in the same places. We said, well, let's help you understand how to widen the aperture of recruiting, widen the aperture of opportunity, and guess what? The performance actually increases as a result of that. Companies like Jamf, one of our software companies now public, saw that directly. When I met with Dean, our CEO there, when we first bought the company, he's like, I've got no diversity. He's in Wisconsin. I said, yeah, you don't. But now he's one of the more diverse enterprise software companies, and his performance has been spectacular.
So you're actually finding that when you go into the portfolio companies, they say, thank you, we want to do this.
They don't know how.
Yeah.
And so part of our role as private equity managers is to bring systems, it's a best practice, systems and solutions that we can deliver at scale that are proven effective, okay, and that also have the ability to evolve because, systems have to evolve in order for them to remain relevant and effective.
Yeah. Obviously, I like that you put values into the business that you're doing. We've run out of time, Rob. Is there anything you want to say to this great audience?
Yeah, make sure that if you have a chance to vote, to do this in June, we're doing it in June and not February. So that's the only thing I would recommend. So
all right.
hopefully everyone's had a great time. Thanks, Sally.